Welcome aboard, shipmate. This is the one and only, often imitated, never duplicated, veteran-owned and operated Dapper Dividends. I am your host, Russ, and this is where I show you what I'm doing with my two portfolios. I have a taxable and a tax-advantaged portfolio, both at Charles Schwab. I love Schwab, not a plug, but I'm telling you what my experience has been with them. It's been great. And I'm going to share with you every week what I put into those. And I'm also going to give you, from here on forth, one stock a week. So if you just want to come for that, I'm going to show you what I think is undervalued, underappreciated, people should be looking at and considering buying. And if it's right for you, go for it. I'm not giving you advice. None of this is advice, as I'll do a disclaimer at the end, obviously, for fun and entertainment. But what I'm trying to do here is, I have two children and I'm busy, and yesterday we had a party for my daughter, who is going to be turning 13 tomorrow on September 28th, 2020. I will officially be the parent of a teenager, and I'm busy. So I'm going to level with you. I've spent a lot of time trying to figure this thing out. I'm 42, and this has just been way out of my comfort zone. I've really been struggling at times with editing and trying to make things just perfect. And as you're going to see going forward, I'm going to leave a lot more mistakes in there because I'm busy. I can't spend so much time editing anymore, and I'm going to make it go quicker, but you're going to get the information, and that's what's going to count. We're human. I'm a human. I don't agree with people that edit out every single little mistake. I tried that. I went down that path. Didn't really work out so well for me and the amount of time that it took. So without further ado, what I am doing here is I'm sharing with you how, whether you have kids or not, I'm building legacy. I'm building generational legacy wealth. I'm building something that is going to provide for me and bring me passive income. And then the people that come after me and people that I have not even met yet will be helped out and hopefully have an easier life from the money that I'm creating and what we're doing here. Come with me, join me, give me your support. I know you're not supposed to break in the golden rule asking for you to like and subscribe and all that. I'll hit you up at the end, but seriously, if you want to learn and grow with me, that's what I'm doing. I'm not perfect. I may be wrong, but I'm not uncertain. So join me, like me, subscribe me, like me. That sounds terrible. Anyways, we're going to get into it. We're going to get into the portfolios, and I'm going to start off right here with this fancy animation showing you exactly what stock that I think is a good go for I think is a great buy and a great investment for the long term. Let's check it out. That's right, so it is Kroger. Kroger is my stock watch, my stock pick of the week coming up. I may be jumping in. They are the country's biggest, by market cap, they are the biggest grocer. Right here you can see that their consensus price target is $35.26, so they have a 5% upside on that currently. Charles Schwab has an A rating that is the best. They have an A rating. They have a buy rating on Kroger, and this is as of September 18th, so a few weeks ago. Again, they do have a very good balance sheet here. This saves you a lot of time when you get these analyst reports. I'd like to point out the revenue. You can see that year over year, the revenue does keep inching up or staying roughly the same, and it is expected to rise. They have done well because of COVID. This will be a reoccurring theme. Schwab points out that Kroger's e-commerce platform is already stronger than its closest peer, Albertsons, in our opinion, and should get even stronger next year as Kroger begins to open its Ocado warehouses. CFRA has a price target, a 12-month target of $42, so that is a little bit of room to grow. Once again, you'll see, we believe e-commerce growth is set to accelerate, and Kroger's recent investments in e-commerce will help it gain market share in 2021. We believe e-commerce growth in the food retail industry is poised to accelerate due to the COVID-19 pandemic, and Kroger's recent investments will help it gain market share. Kroger is currently building several automated customer fulfillment centers, first one set to open in 2021, which we believe will help Kroger strip out some labor costs and speed up its online grocery shipping process. Very solid to see that they are adapting to the new way of doing things. They are not going to be left behind. So if you check out their dividend, still sticking with CFRA's report, in 20 cents in 2011 to 2020, where it is 62 cents. That means it has tripled in price. And as I was saying, they are by market cap just barely eking out low block companies. They are the biggest grocer in the country. And the last analyst report is Argus. I like Argus. They also have a buy rating, raising their target from $38 to $40. In June, Kroger raised the quarterly dividend to 18 cents per share from 16 cents, marking 14 consecutive years of increases. They're raising their fiscal year 21 dividend estimate to 68 cents from 66 cents. Over the last 5 years, Kroger has increased the dividend at a compound annual rate of 11%. 11% compound annual growth rate is very solid. This is a very solid and well-run company. And here we are again. Everybody's taken notice of the e-commerce. Digital sales rose 92% in quarter one, 127% in quarter two. And their digital orders represented more than 7% of sales in quarter two. And Argus believes that customers like curbside pickup because they can get their orders at their own convenience rather than having to wait for delivery. This is something that I am super excited to see. Grocers do have razor-thin net margin, and you can see the dividends were from 40 to 45 to 49. They have just been increasing for 14 years, and their growth rate year by year, 16, 13, 8. This is something they pulled from the SEC filing. They kind of make it easier for you to read and digest. That the company has said its priorities for allocating capital are investing in the business and consistently increasing the dividend and using any excess capital to repurchase shares. So increasing the dividend is good, and then repurchasing shares that they can afford will also increase the price of the shares. Over the last 5 years, Kroger has increased the dividend at a compound annual rate, there it is again, 11%. So there you go, Kroger. I highly recommend Kroger. Take a look at it. It's not advice. I would say definitely, I'm putting this up. This will be fun. How about we all come back in a few years from now and check to see what these prices are on these 32 pack of water bottles. Check it out. Put Kroger on your radar. Do your own due diligence and see if it makes sense for you. Meat. Thank you. All right, let's get to my dividend roundup and what I did buy. You can read a little synopsis if you want to go to dapperdividends.com of what I have there. No dividends received in my taxable portfolio. And check out my buys of the week. I went a little bit on a shopping spree here. I got some Pepsi every week. I'm buying a share of Pepsi. Got that at $130. 3% yield, definitely nice. I don't know if you know this, but Pepsi was once called Brad's Drink, and that was after Caleb Davis Bradham. How nice, Brad. Brad's Drink. I wouldn't drink anything called Brad's Drink. I bought a share of AbbVie. I bought that at $86. I continue to buy. Very strong. Look at that 5.4, almost 5.5% yield. Added $4 of annual income. And if you don't know, AbbVie has treated, they say on their website, they could be lying, but I don't have any reason to doubt them, 30 plus million patients in over 175 countries have been helped by AbbVie products. That's pretty fun. That's a good company to be invested in. They help people. I like helping people. I will buy more AbbVie. Kimberly-Clark, last week we talked about people are always going to need diapers and need things to wipe their butts and blow their noses. Bought those shares at $145 and $146. The starting yields were pretty damn close to each other. Kimberly-Clark has 44 years of dividend increases. Thank you, Kimberly-Clark. This is why they are a dividend stalwart. And what else did I buy next? Johnson & Johnson, the Band-Aid company. $144. I buy a lot of them. They're just the tried and true. Johnson & Johnson, we got those at $144, 2.79% starting yield on those shares. Band-Aids, and did you know that they have had only 9 company leaders since their founding, since their inception in 1886? Hell yeah, Johnson & Johnson. 2 different shares. 2 different shares of Metlife I got. I bought those at 37 and 35 bucks, and you can see how the yield, the starting yield goes. Look at that. This is a clear picture of when the share price drops, the yield goes up. The share price goes up, the yield goes down. This is a very cool company. They're in insurance. They are in the financial sector, but the insurance companies have been brought down by the banks. It's okay. I'm buying Prudential and Metlife. I'm very comfortable buying those. And Metlife, they started out as the National Travelers Insurance Company, and they changed March 24th, 1868. They've been in business 140 years. Hello, Metlife, and I know that's where the Giants play too. The New York Football Giants. AT&T I bought. God bless AT&T. 7.35% starting yield on those shares. It did drop even lower. It dropped in the 27s. $8.32 is what that was added to of annual income. Fun fact about AT&T is that they're testing drones with Intel and Qualcomm, and they say that they can connect 10 million Fords to the 5G network. We'll see if they're telling the truth on that. Little disclaimer about my portfolio. I was having some issues getting it to load up. I have people, I hope, working on that soon. So the portfolio links work, but they will not be scraping the FinViz data. Don't know why. We're going to figure that out. Don't worry about it. Next up, Cisco. Cisco Systems, headquartered in San Francisco, is short for Cisco. That's why they call themselves Cisco. San Francisco, the San Francisco treat. I bought 3 shares of Cisco at $37.89. Did you know they used to make cameras? Now you do. Congratulations on useless information. 3.80%, added $4.32 of added annual income. And last but not least, I bought 1 share of IBM at $117.50. Check this out though. That 1 share pays $6.52 of dividend income per year, 5.5% starting yield. I think IBM is criminally undervalued. They're into the quantum computing, kind of they're neck and neck with Honeywell of all businesses. And IBM has had 5 employees win the Nobel Prize. Yes, the Nobel Prize. And 4,000 employees of IBM were employed in putting the man on the moon in the 1960s. So there's the income breakdown. What you got here? What you got? $1,543.06. That pays me $128 a month, $29 a week, $4. I'm almost getting, someday we'll be there to the $5 a day. Some countries, people don't even make $5 a day. 17 cents an hour. We're getting close to that, 20 cents an hour. Moving on to the self-directed IRA. A few less buys here. So I had sold those shares out of the taxable. I'm selling the REITs. If you catch the last video, which you can check out here. Realty income, I bought 10 shares at $60.50. That yields 5.61%, very healthy, and that added $27. They do pay monthly. Now those are non-qualified dividends, so check it out in the last video. Look that up. Make sure you know what that means. And realty income, started as a single Taco Bell. They bought 1 Taco Bell property in 1970, and that was Big Will and Joan Clark. And they continue to run the company much the same way, trying to focus on low debt and clean balance sheets. Next, I bought 2 shares of another REIT, Federal Realty Trust. They are one of the oldest REITs in the world. And here's how we're going to tie it in. This is a little Easter egg. Kroger is one of their top 25 tenants. Big ups to Federal Realty Trust, and even bigger ups to Kroger. Hand in glove. I'm probably going to invest in both of them. So basically, Kroger's paying me money through rent, through Realty Trust. So I'm going to have to I want to double dip into Kroger. Let's get them paying me 2 ways. 5.61%, same as, oh, God, I hope that wasn't a mistake. If it was, it's okay. So Federal Realty Trust. I also believe that they are going to be okay because they are more of an upscale shopping, kind of like Simon Property Group. And as some of these smaller, dinkier, rundown strip malls go to the wayside, I think they're going to fall apart. And Federal Realty Trust and Realty Income and Simon are going to be there to withstand this whole thing. I bought, talking about withstanding, 4 shares of ExxonMobil, 10% yield. Que loco. Es muy terrible how their stock has been performing as of late, but I'm buying more because they are, as I said, they're fully integrated. They have feedstocks of natural gas and crude that go into the many products. I tweeted out a picture of some Exxon grease, some lubricant. Actually, ExxonMobil, they discovered rubbing alcohol in 1920 when the company was known as Jersey Standard. And also, one little fun fact here, the Wright brothers used ExxonMobil fuel, well, it was Exxon back then, in their first flight. They used fuel and lubricants from Exxon. Good history there. Part of our nation's history. Bet you didn't know that. Now you do. And General Dynamics got 2 shares of GD at $136.50, starting yield of 3.22%. Yeah, actually, and going back to Exxon, look at that, added $13, stupidly high yield. And as long as oil, I wanted to say, stays above $40 a barrel, I think we're going to be okay. And I think they are big enough to withstand these headwinds. We'll wrap this up here. General Dynamics, 2 shares, $136.50, and $8.80 it added into my pocket. Do you know they make 50% more money from selling airplanes than they do tanks and armored vehicles? I think that's cool, and it's one word, Gulfstream. All those rich people flying around on Gulfstreams. You can get a piece of that pie too with General Dynamics. That's one of the many things they do. And Gulfstream also is their biggest and most profitable sector. Now you know, and knowing's half the battle. Yo, Joe, 3M, the last but not least. Not a lot to say about 3M. Big, strong company. Bought those at $160. I'm hoping it goes down more. I'll probably add just a little bit more. 3M is also the leading manufacturer of signage and materials around the world for both traffic safety and commercial messages. You gotta know that. Love them. Added $64 of annual income that I don't have to pay taxes on because that is in the self-directed IRA. So $1269.16, $105 a month. $24 a week. I'm not taking any of this out, so this isn't as fun as the taxable because I could just take that cash if I wanted to. This I would have to pay the 10% penalty on, but still, I like to keep track of it. I give myself 5 stars for doing that. Thank you. So go to my website, check it out if you want, dapperdividends.com. I've been working on a book, so I've been kind of slacking with some of these posts. We've been busy. The wife has been getting the kids going with school and the e-learning and all that. If you found what I did here was valuable and you liked it, again, give me a like, give me a subscribe, share it, give me your comment, tell me anything. I'm so open to feedback. Give me constructive criticism. I want to hear what you have to say. What do you think of these? What do you think of the direction of it? Where would you like to see this go? I need to know. Let me know. Leave a comment. Anything at all, good, bad, ugly, I don't care. Let me know. Follow me on Twitter at RustyRam78. I also have a podcast I do every Tuesday and Friday called Dapper Dividends, where again, I'm just talking dividend growth investing, sharing some stories, and what else? I don't know. I'm going to get out of here. It's Sunday night. I got some editing to do after this. And hey, disclaimer, this is not financial advice. I'm not a financial advisor. These are just my thoughts and opinions shared for fun and entertainment only. And I will talk to you guys later. Peace.